Ladies and gentlemen, boys and girls, and children of our ladies, you are now tuned into the Investor Show. If you haven't done so already, ladies and gentlemen, go ahead and make sure you hit that like, subscribe, comment, and share button. And as you already can see in the description box, we're going to be talking about, let me go to make sure I run that across the bottom. Stock market jumped up 180 points. It actually did a nice rebound. And then we had the stock market jumped after the Fed decided not to release their interest rates. I'm trying a new camera today, so y'all kind of bear with me on that end. But also, well, oil hit a boom. So we're going to be talking about a couple of indexes, all of the good things like that. But ladies and gentlemen, if you haven't done so already, go ahead and make sure let me go and find it. Hit the subscribe button, hit the bell icon, hit that like, comment, and share button. Ladies and gentlemen, boys and girls, and children of all ladies, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. So, ladies and gentlemen, if you haven't done so already, go ahead and make sure you hit that like, subscribe, and comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we are going to jump straight into it. So without further ado, I guess I'll go ahead and put my little, there we go. I'll make sure I make one. Y'all give me 1 second there. All right. So, ladies and gentlemen, today the Federal Reserve, I told you Jerome Powell, who's the chairman. Let me see what y'all saying in the comment box before I jump down into that. Lucky's mom, she said, good evening, Prince and everyone. Hey, how you doing, Lucky's mom? Thanks for tuning in. Al, what's going on? Prince of Investment, what's going on? Nice to see you there. Then we got, Antonio, he's checking in from Pennsylvania. He said, good evening, investing family. Nice. And over there on Twitch, hi, this is Freeman Kennedy, host of Sip and Talk out of Orangeburg, South Carolina. So we got Florida, Colorado, Philadelphia, and South Carolina in the building so far. All right, so this is episode, this is the ones that I come in and I talk a little while. So the first thing I want to talk about is the Federal Reserve, right? The Federal Reserve. And Max B, what's going on over there on Twitch? If you haven't followed me on Twitch, go ahead and make sure you check me out on Twitch, and I will follow you back as well on Twitch. So check me out on Twitch as well. That's our latest broadcasting. So I got a new camera. I don't know. It got my color, almost look like a light-skinned red bone a little bit, So I think that's kind of funny, So when I'm looking at that, I'm thinking to myself, like, my color looks a little off with this camera. I don't know if I may like this one. So y'all let me know what y'all think about it in the description box, right? All right, that was laugh sound effects. So anyway, ladies and gentlemen, we're going to talk about the first thing we're going to get into is the Federal Reserve. The Federal Reserve chair, y'all always hear me talk about Jerome Powell. So let me make sure I type this in. I was running a little bit behind today, had to run a couple errands, and I have an interview tomorrow. Tomorrow I'll be doing it live. Supposed to be doing a live interview tomorrow here in Denver. I will be on the DBT podcast. I'll be there live in their studio. So I had to go get a haircut. Now let me know. Hopefully my haircut ain't too bad. Had to go get a haircut. I didn't want to embarrass the Investor Show family with showing up there and looking crazy like I do sometimes on my own episodes. So anyway, had to go out and run a couple errands. So I was a little late. So I'm a little bit behind on the show, but I had already done the research before I left. So the first thing we're going to get into, ladies and gentlemen, the Federal Reserve. The Federal Reserve. Make sure I don't misspell nothing. Y'all have me looking crazy on my banners. So the Federal Reserve spoke today. Let's go ahead and see what the Federal Reserve released out today. So first, let's talk about why they're important. The reason why the Federal Reserve is important because they control the interest rates. And when interest rates, right now, we're in very, very, very low interest rates. Let me pull that off the screen before we get into that. So why the Federal Reserve important? The Fed chair is Federal Reserve Jerome Powell. On Monday and Tuesday, they have a quarterly meeting, and they control what interest rates are going to be. Are interest rates are going to raise? Interest rates are going to stay the same? People became very concerned about that because they're saying, wow, the economy is starting to open back up. We're seeing these value stocks start to run through the roof. So are they going to raise interest rates? So today, the market had been going down in the morning. So the market started off down, with stocks trading down. Then they slowly took a nice uptick later in the day. So later in the day, once the Federal Reserve pretty much said, hey, we're not going to raise interest rates, that's when everybody got happy. So what we're going to do right now, we're going to read exactly what the Federal Reserve said from the federalreserve.gov. We're going to read their statement they put out, and this is going to leave some key indicators of when interest rates are probably going to rise. So let's take a look at it right now. The Federal Reserve. So here we go here. Let me blow this up a little bit. So right now, ladies and gentlemen, this is coming from the Federal Reserve that was released on today, March 6th and 17th at 2 p.m. Eastern. So here we go. The Federal Reserve is a committee using its full range of tools to support the U.S. economy in the challenging time, thereby promoting its maximum employment and price stability goals. So right now they're saying, when they say they have a range of tools, they're saying they have a range of tools as far as interest rates, right? They can control the interest rates. And also you're going to hear some very secretive stuff up in here that most people are not going to read. And if they do read it, they're not going to be able to interpret it. So let me make sure my channels are correct. Yeah, make sure I'm good to go. 1 second, y'all. No. Y'all give me 1 second. I should already. Let me know how my sound is sounding. I want to make sure it's good all the way. Channels 1. Microphone. Okay, there we go. Level. All right. Okay. All right. There we go. Yeah. All right. I just want to make sure I was good on my microphone, that y'all could hear me. Okay. Turn up a little bit. There we go. All right. Now let's get into it, ladies and gentlemen, about the Federal Reserve. What did they say? And the key indicators they laid out there. So y'all could comment, tell me where you're from as y'all are checking this in live. So right here, the first thing they said, the Federal Reserves, they're saying with their tools. So when the economy is doing well, the Federal Reserve have tools like interest rates that they can raise. They can raise interest rates to keep up with inflation. So the top two things they can do is, by controlling interest rates, they can control inflation and how free money is, and also tight money, loosen money that can result into employment and can result into market stability, right? So let's see what they said here. The pandemic is causing tremendous human and economical hardship across the United States and around the world. Following moderation in the pace of the recovery, indicators of the economical activity and employment have turned up recently. Although these sectors mostly adversely affected by the pandemic remain weak. So it's saying that they have indicators that the economical activity and employment has turned up recently, even though they're saying the places that was affected the most, like your airlines and travel, restaurants, they remain pretty weak. So what did they say here? Make sure I didn't lose my space. Inflation continues to run below 2%. Overall financial conditions remain accommodated, in part of reflecting policies measures to support the economy and the flow of credit to the United States households and businesses. So essentially right here, they're saying that inflation is still below 2%. Even though they're saying the economy is starting to pick up, they're looking at the areas that was hit the hardest, like the travel and restaurants. They're still below. And they're also saying that inflation is staying below 2%, which they want to have. The path of the economy will depend significantly on the course of the virus, including progress in the vaccination. The ongoing public health crisis continues to weigh in on economical activity. Employment and inflation are poised to considerably risk the U.S. economical outlook. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. Bingo. Here it is right here. The Federal Reserve's goal is to keep inflation at the 2% over the long run. So if inflation starts to get over 2%, you can see the Fed is saying they're going to probably step in. So they want to say we want to get the most people employed with inflation staying at 2%. Why are investors caring about inflation? Inflation affects your real returns. So what good is it you make 10% returns, but inflation goes up at 9%. So you made a 10% return, but your real return after inflation and taxes turns out to be 9%. So the higher inflation is, it affects investors. That's why they want to keep an eye on it, because they're looking at your real returns, right? With inflation running persistently below the long run goal, the committee will aim to achieve inflation moderation above 2% for some time, so that inflation averages 2% over time, and the long-term inflation expectation to remain anchored at 2%. So they want inflation to go a little bit over 2%. They want to anchor in at 2%. The committee expects to maintain this accommodation stance for monetary policies until these outcomes are achieved. The committee decided to keep the target range for the federal fund at 0 to 1.4. So from 0 to 2.5%, that's where they want to keep interest rates right now. That's where they're at, and that's where they're going to keep them. So right there, they're telling you we're not going to raise interest rates because inflation is not too high, and we feel like there's certain sectors that haven't rebounded completely. So, okay, 1.5%, and expects to maintain that target until market conditions raise. Blah, 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 blah. Okay. That's one thing. They saying, here's the sauce. They're keeping the rates down until they can get inflation to be at 2% and maintain 2%, also with max employment. So as you can see, unemployment numbers start to drop and you see inflation sit around 2%. That could be an indicator that the Federal Reserve is probably going to start to raise interest rates, which could not take down the stock market, but could cool off the stock market. So that's one thing to keep in mind. The second thing, here's another. They always say the devil is in the detail. Here it is. The Federal Reserve will continue to increase its holdings of Treasury securities at least $80 billion per month, and of an agency mortgage-backed securities of at least $40 billion per month, until sustainable further progress has been made towards the committee's maximum employment and price stability goal. So when the Federal Reserve is saying, hey, we're buying Treasury securities of $80 billion per month, they're telling you that's their code word. They're pumping money into the market, right? When the Federal Reserve is just buying a bunch of U.S. Treasury bills, they're pumping money right into the market, ladies and gentlemen. Keep that. That's the sauce right there. The Federal Reserve is pumping up the market by putting $80 billion by buying Treasury bills every month, and they plan to do this until they can get the maximum employment and price stability goal. So they're going to do this until unemployment numbers kind of get back to a good pace. So these assets purchases help foster smooth market functionality and accommodation functional conditions, thereby supporting the flow of credit to houses and businesses. So, let's go ahead and finish it off. In assessing the appropriate stance of monetary policies, the committee will continue to monitor the implications of information that are coming in for the economical outlook. The committee will be prepared to adjust the stance of monetary policies as appropriate if risk emerges that could impede the attainability of the committee's goal. The committee assessments will take into account a wide range of information, including readings on public health, labor market conditions, inflation pressures, inflation expectations, and financial international developments. All right. There it is from the Federal Reserve, ladies and gentlemen. This right here is telling you from the Federal Reserve, all they're saying is they are pumping money into the market and they are planning to not touch interest rates, which was good for the market. They're not touching interest rates and they're pumping money into the market. I mean, there's nothing else to say about that. And they didn't touch interest rates. So they're not going to touch interest rates until inflation is over 2% and we have very low employment. Y'all hear that? If inflation hits over 2% and unemployment is low, that's when you can see the Federal Reserve is probably going to start to spike interest rates. The devil's in the details. So Jerome Powell came out and gave a very good speech about that. The reason why you want to be tuned into this information, because this information is very important, because the market was lagging the whole day until he put out that until he said, hey, look, ladies and gentlemen, I'm not going to raise the interest rates, even though I know the economy is starting to pick back up. We have areas that's been hit the hardest that haven't been picked back up. And until those things happen, we're going to continue to have interest rates the same. So that's a big thing coming out of the Federal Reserve, right? So now, before we get into it, now we want to look at, we had Uncle James that came in here and put a pretty good bug in my ear. Well, you know what? Before I get into the whole will oil hit a boom, let's talk about Let's pay attention to economic indicators. I want to ask a question out there, ladies and gentlemen. I got a question for everybody out there. So if you're tuning in, catching this or whatever live, it says we have over, a good bit of people in here live today, at least for my platform, at least. I want to ask you guys and girls a question. Out of the three major indexes, you should know, out of the three major indexes, which index has been running the year so far? Which index has been performing the best so far this year? Because, ladies and gentlemen, if you don't know, you already know.
You're going to learn today.
If you don't know. So anyway, I want you to comment out of the three major indexes. I'll go ahead and give you this clue. The three major indexes. That's going to be your Dow Jones, your NASDAQ, and the S&P 500. Out of the three major indexes, what has been the number one performer? All right. So we're going to talk about index rotation. That's going to lead us into index rotation. And why is this important? We're going to talk about how to find good companies to invest in. How to find good companies to invest in. What y'all are seeing. Charles Barkley Ghostwing. That is hilarious. Whoever name is, somebody said Charles Barkley Ghostwing. Y'all remember Charles Barkley Ghostwing when he went to go swing and he was almost about to fall down? He hesitated 2 times, then hit the ball. So that's kind of funny. Somebody's name is Charles Barkley Ghostwing. Man, I just visualized that. I didn't even know that was your name over there on Twitch. But anyway, you said, will you start opening stock courses, classes where you teach people how to invest? I get asked that all the time. I don't want to come off as the, hey, let me show you how to get rich course. You got tons of that. You got that. Plenty of people around the world are doing that. And that's not something that I'm very interested in to do. That's going to be about the people. If the people tell me what they want, that's what I'm going to follow. But no, I do not offer courses to sell people and things like that. Jonathan Williams said PBT. I think he meant DPT. Jonathan, I think you meant DPT. You talking about the oil, the $4 oil. We're going to get into that. Nathaniel Lewis, his answer is it the NASDAQ? It's the NASDAQ out of the Dow Jones, S&P 500. Is it the NASDAQ?
Hell to the no, to the no, no, no. Hell no, no, to the no, no. Hell to the no, no, to the no, 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 no. Hell to the no, no, to the no, no, no.
So no, that answer is not correct. It is not the NASDAQ. Actually, the NASDAQ is the least performing one so far this year. We're talking about year to date, meaning January until today. The NASDAQ is the lowest performing one so far. So no, that's not right, Nathaniel Lewis. Oh, Lucky's mom. She was another one. She said it was the NASDAQ.
Hell to the no, to the no, no, no. Hell no, no, to the no, no. Hell to the no, no, to the no, no, no. Hell to the no, no.
I'm just having a little fun with it, but it's okay.
You're going to learn today. You're going to learn today.
Y'all give it up for Max B. He got it right. He said the Dow. It is the Dow Jones. So far, the Dow Jones is the best performing one. Here we go. The Dow Jones. Congratulations, Max B, on getting that right. Congratulations to Max B on getting that right. It is the Dow Jones. The Dow Jones. I'll hit the wrong button there. Just cut that off there for a second. So it is the Dow Jones. Out of the Dow Jones, the NASDAQ, and S&P 500 so far this year, it has been the Dow Jones that's been taking the year so far, because the Dow Jones is usually your traditional stocks. These are your traditional value, homegrown stocks, right? So here we go. So, and Max B, you are right when you said it. You said, Max B said, he said, now people are leaving tech. Yes, people have been leaving tech this year. Last year was a great year for the tech world. Apple did good for me. Microsoft did well for me. My cybersecurity stocks was doing well. My green stocks was doing well. I'm still in the energy, stuff like that. But people have been rotating out of those companies and moving more into Dow Jones companies, right? So no, the NASDAQ is not the one. There you go. I am Dillion. I think, look at I am Dillion. He's like 17 years old too. Congratulations, man. I'll give a round of applause for I am Dillion, who said the Dow Jones. Congratulations there. Let me give him hand claps. Dillion, I got to give it to you, man. I am 36 years old. When I was 17 years old, I got a nephew that's 19 or 20 years old, and he hit me up every now and then. He makes his own money, but I'll probably be off doing something crazy. And look at you. You in here tuning into the Investor Show, keeping your funds right. You're going to be a winner, guaranteed financial, I will say. So right now, Nathaniel said, I'll be on the Forex. I'll be on the Forex. Okay. Forex, that's the foreign exchange market. I know Nathaniel, earlier he said, he said it was a NASDAQ. It wasn't the NASDAQ. So yeah, nothing wrong with Forex. Nothing wrong with Forex at all. That's your foreign exchange market for people who don't know. LK Raw, he said, people live in tech and I'm buying tech. I want more people to leave so I can get an even better price. Hey, that's smart. Round of applause. There you go. Because the funny thing is, let me ask you a question. Now, next question, ladies and gentlemen. Which index out of the S&P 500, NASDAQ, and Dow Jones was the smallest performer last year? In 2020, out of the three major indexes, which was the least performing out of all three of the indexes? I need to get that Jeopardy music. Do 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 do. All right, time is up. So let me see what y'all say in the comments. Let me pull this up. Let me verify. I want to make sure I put out right information. I don't say nothing crazy on the air. All righty, here we're going to look up. Where is my DIA? DIA. Now that we are here, the reason we are here. So right now, the question right now is, out of the Dow Jones, S&P 500, and NASDAQ, which was the least performing index? And it's all going to make sense when I put it all together. Which was the least performing index of 2020 from January 1st of 2020 all the way until December 31st of 2020. All right, that's the Dow Jones. We're going to throw that NASDAQ on that bad boy. We're looking at the least performer. Which was the least performer last year? Let me see what y'all say in the comments before I bring it up. Antonio out there in Pennsylvania said the S&P 500.
Hell to the no, to the no, no. Hell no, to the no. Hell to the no.
All right, so it was not the S&P 500. Isaac says crypto. That's not one of the three major indexes. So Isaac, no. Not as of yet. I kind of put that in stocks again. LK Ross said IWM. What is IWM? Is that an index that follows them? I don't know what you're saying, LK Ross. So I got to go there and hit you with the. I am Dillion said the Dow. Look at I am Dillion. Okay. Look at I am Dillion with the Dow Jones again. Charles. Your name on Twitch, Charles Barkley Golf Club Swing, is hilarious. But you are definitely wrong again. So it's not the S&P 500. Look at Max B over there. Look at Max B. Max B, he is correct. It was the Dow Jones. LK Ross said the Russell 300. I'm thinking you're talking about the Russell 2000, which is a small company, small market, small cap index. That's not one of the major three indexes. The major three indexes is the NASDAQ, Dow Jones, and S&P 500. He said, but I was still wrong. I see. He said, Bishop Bowinkle. Yeah, that's, ladies and gentlemen, this is Bishop Bowinkle. I think that's hilarious. But no, it was not the S&P 500 and it was not the NASDAQ. So when you look at it, ladies and gentlemen, I'm bringing this up. Last year, the Dow Jones was the least performing. I'm going to pull it up to show you guys. So you guys don't have to say, hey, it was this random funny looking dude on YouTube and on a podcast that said it was. No, he showed it to me. You already know I'm going to show it to you. Make sure here. Hold on. You know what, I'm going to do it like this to make sure it's not the wrong one. It don't matter which one I do, huh? Okay. Making sure I'm pulling the right string. Look at Max B. I see you, Max B, over there on Twitch. Max B, I'm going to, okay, here we go. All right, ladies and gentlemen. And I want to put all of this in perspective. So right here, as I am sharing my screen, this is 2020 last year. The number one performer was the NASDAQ. NASDAQ was the hot tamale last year. Pop tamale, I'm sweating. Woo! S&P 500 was in number 2. So you look at the NASDAQ, almost did 40% last year. S&P 500 did a little bit less than 2%. I mean, little less than 20% last year, about 18, 19. And then you had the Dow Jones coming in last year. The Dow Jones was at a whopping somewhere between 5 to 10%. So Dow Jones was the weakest one last year. But also, if you pay attention to now you turn around and you pay attention to now, look at the Dow Jones. Now you look at the NASDAQ, it's the lowest performing, followed by the S&P 500, and you got the Dow Jones on top. So ladies and gentlemen, this brings us straight into our next topic, index rotation. So as you can see right here, people have rotated. Last year in 2020, people were at the NASDAQ almost did 40%. Great year for the NASDAQ. Dow Jones was in last place last year. But now you look at the first quarter coming out so far, you're watching the NASDAQ be in last place. And then you're watching the Dow Jones be in first place. So now you got to ask yourself the next question. What is in the NASDAQ? What is in the Dow Jones? So you're seeing everybody is getting out of NASDAQ. Last year you had Apple and Tesla and Google, the FANG. Who knows what the FANG is? Facebook, Apple, Netflix, Google. I'm missing one too. Netflix. No, it was Facebook, Apple, Amazon, Netflix, and Google. The FANG stocks had a great year last year, running the NASDAQ, right? Now you fast forward. Now you look at this year. Everybody is leaving those companies and they're running into value. That's exactly what Max B said. Everyone is rotating back to value. That is correct. I almost hit my own light there. So now we're going to take a little step further and we're going to see what was everybody in last year that they're leaving this year. And what did everybody throw away last year that they get into this year? Right? So when you're building a portfolio, I always tell people build that portfolio with the S&P 500, a major index, one of the top 3 major indexes. And with me, with my portfolio, on more of a aggressive portfolio, I'm paying attention. Last year, the corner of my portfolio or the bulk of my portfolio was NASDAQ because, it was a hot one. Now coming into this year, I'm looking at the first quarter. I'm like, the NASDAQ is almost on the struggle bus over there, even though it's going to come out fine. But everybody's rotating into the Dow. Now I'm looking inside of the Dow. Okay, LK Ross said, I said the Russell because I don't trade the Dow. I trade QQQ, which is the NASDAQ, and the SPY, which is the SPY, S&P 500. IWM was the only thing I could think of without going to Google. He's something I could think of without going to Google. Nothing wrong with that. But if you look at the QQQ so far this year to date, it's the lowest performing index. SPY is beating QQQ. SPY is the S&P 500, ladies and gentlemen. So now, hold on, let's see what okay. Max B said green energy and tech. He said toss for oil and airplanes. That's true. Miss Michelle Thompson said, when you say value, are you saying people are going to what they know, such as fame? The exact opposite. Now we're going to pull up what value. When people say value, what do you mean by value investing? What do you mean by value stock? Don't worry about that, Miss Michelle Thompson. You stay tuned, and you know the Investor Show. We're going to get straight into it. All right. So let's do it. All right. So let's bring up my screen here. Let's look. When you say value, Prince, what do you mean? Let's see what's inside of the Dow Jones. Let me screen out here. Let me go to here. So I'm pulling the DIA, which is an index that follows the Dow Jones. You know what? And I'm going to go to portfolio. So this thing is the ETF that tracks the Dow Jones. And this is going to give me a good indicator, right? So right here, things, when you say Prince, what is it? 50% of this portfolio is, here we go, Visa, Boeing, McDonald's, Caterpillar, Microsoft, the Home Depot, Goldman Sachs, United Health Group, right? What is United Health Group's stock symbol? What are they right now? UNH. How much are they right now? Oh, they're $352. Okay. Got this crazy guy who always emails me, but whatever. All right. So inside of the Dow Jones, you got things like McDonald's, very good American staple. Nothing is more American than a fast food, greasy burger, followed by some greasy fries, smothered in ketchup with a Coca-Cola on the side. Nothing more American than that. Very valuable company, you know, the largest, pretty much a big real estate conglomerate, but the largest, well-known, one of the top 5 brands in the world, McDonald's, right? Last year, people didn't think about McDonald's, and now it's becoming the darling, right? Now you're looking at Boeing, Visa. Look at Caterpillar. Caterpillar is like the biggest thing. Who thought about Caterpillar? You know, those big machinery. Caterpillar is having a major year this year. Microsoft, Home Depot, Goldman Sachs Group. So you're looking at these companies. These are good household. Dow Jones is like your household name. It's 30 companies. It's like your household name companies that everybody knows and you grew up on. You know they make money. You know they're profitable. You know everything about them. The likelihood that they're going to disappear is pretty slim. And okay, I'll give me 1 second. Hey, can I give you a call back? Yeah, sure. Okay, cool. I'll give you a call. All right. Yes, right. So there we go. So there we go. So these are the top 10 companies inside the Dow Jones. Now let's look what was inside the NASDAQ. NASDAQ is more tech heavy, right? Let's look at the top holdings inside of the NASDAQ. Let's go to QQQ and let's go to the portfolio of QQQ. Y'all let me know how my sound is too. Hopefully my sound is good. Hopefully my camera is better. So right here inside of the QQQ, you have Apple, Microsoft again, Amazon, Tesla, Google, Facebook, PayPal, Intel Corp. So it's more tech companies. So the NASDAQ is more tech company. They were the darlings last year. Now people are dumping them and they're going to the Dow. The ones I just named, they're going to McDonald's. They're going to Boeing. They're going to Home Depot, right? You know, this is called index rotation. Rotating. People are leaving one place, going to another. Now, last year, you want to be on the opposite of the rotation. But you want to keep in mind, if you have a portfolio, my look is being on the opposite of rotation. Last year, people were throwing away those Dow stocks. They threw away Home Depot and McDonald's and all those companies, and they ran to the companies I'm looking at, that you're looking at right now. Now people are throwing away these companies and going back to the Dow, because the Dow has all the companies that are going to benefit the most from the reopening. See, Amazon is going to be Amazon when we open back up. Google is going to be Google. Facebook is going to be Facebook when they open back up. The companies that will stand to benefit the most of opening back up are things like your McDonald's and your Home Depot and your your consumer staples. I think Coca-Cola's in that Dow too. That's not all the Dow 30, but those are the top holdings of it, right? So let's see what you're saying here. LK Ross said, "Where are these other companies coming from? I don't see them. In what regard? You talking about the Dow Jones, the Nasdaq, S&P 500? What are you talking about?" Michelle said the QQQ definitely not doing well. I think I'm going to get rid of it. I wouldn't get rid of it. This is the time, Michelle, you got to be forward thinking. This is when it's not doing well, depending on how your portfolio is set up, I will hold it. I definitely wouldn't sell it for a loss. People will be back to it. I will be doubling down on it. And I will start to look at what's hot as well. I will keep where I'm at, double down a little bit more on the NASDAQ, but then I will get a little bit of the Dow Jones too. No reason to get rid of it, because you don't want to end up chasing the bear. Chasing the bull. Everybody out there, what is chasing the bull? This is what a bull chaser does. The bull chaser is someone, when tech stocks are hot, they're in tech stocks. When the Dow Jones is hot, they're in Dow Jones. This is good for somebody who's trading every day. A day trader who's just trying to find a hot wave and jump in and jump out, that could be great for them. But for someone who wants to hold, who's a swing trader, someone who's looking to invest over time, if you find yourself, everybody's on airlines, so now I'm jumping on airlines. Airlines are high now. You should have been jumping on airlines last year when they were low. Now, at the end of the year, let's say the NASDAQ might come back, because the NASDAQ is very volatile. The NASDAQ might come back this summer and knock everybody's heads off and end up at top of the year. You don't want to end up, now the NASDAQ is back up. Now you're trying to jump on the NASDAQ train. Then you try to jump on the Dow Jones train. Then you try to jump on everything else. I look at the NASDAQ now is on sale. You don't want to end up being a bull chaser. Chasing the bull. The bull is a bull market when some things are going up. You don't want to, I'm chasing behind this. Hey, let me chase behind that, right? So that's my thing there. You want to, when indexes are rotating, you want to be on the opposite side of the rotation if you are an intermediate to long-term investor, because you're looking for sales in the market, not for things that are hot. People that ride things are hot. Some people can ride cryptocurrency, they're going up, then get out, then jump back in and ride it as it going back down. It's people that do that. But for people that are intermediate to long-term investors, you want to be finding where the bargains at in the market. So when you go to that NASDAQ and you're looking at those Apples and you're looking at those Facebooks and things like that, those are companies that were Tesla. They were great last year. They were quadrupling and doubling and quadrupling and doubling and stock splitting all last year. Now this year, what has changed? Right? He said, Charles Barkley Golfswing said, as a truck driver, I see a bunch of construction. That cat is definitely being used on the job sites. Cat is Caterpillar. You're right. So Max B said, bull chasers get left the back in high prices. So he's talking about bulls. So he's saying bull chasers get left holding the bag at high prices. You're right. Let's say last year you jumped into Tesla because you start off the year. This was the best thing in the world. So you jump onto the hot thing, green energy, cybersecurity. They were great last year. Let me jump onto that. You jump onto that, then boom. Everybody rotated to Dow Jones. You're like, let me sell these for a loss. Now let me jump on the Dow Jones, airline stocks, restaurant stocks, things like that. And then as soon as you jump on that, then guess what happened? That turns down. Everybody running back to tech. So you don't want to be chasing. So Michelle, I will hold on to my QQQ and then I will look into DIA. Add some DIA, right? If you're a long-term investor. And Miss Michelle Thompson, I'm sorry, Miss Michelle Thompson said, I'm looking to be a long-term investor, still learning. No problem with that. You're very smart for tuning in. And, as I look at, not to toot my own horn, but as I look across the world of media, and financial media is not too many people that's going to give you real facts and things that you are learning and that you can see for yourself. So you don't want to be the person that's chasing. You want to find sales. So right now you're looking at the NASDAQ. Last year, the Dow Jones was on sale. Now everybody's running and happy about the Dow Jones in the first quarter. But now it's the time to look at the NASDAQ is on sale. Right? That's the way I look at it. DIA. Okay. The DIA, this is the Dow Jones. It's an ETF that tracks the Dow Jones. The QQQ is an ETF that tracks the NASDAQ. DIA is an index that tracks the Dow Jones. All right, so you have an index rotation. So that's the thing I want to talk about. Now, the next thing I want to get into is oil. Is oil going to boom this summer? Is oil going to boom this summer? Y'all know Uncle James came on to the show and he talked about oil booming. And I want to bring that up for the summer. Everybody knows I am a green energy person. I'm all for the green energy. I'm all on ICLN. I'm still holding my in phase. I'm just holding on to them, even though they may not be doing so pretty this year. But I am rotating. And looking to, hey, what is happening? What is going on? What are people running to? So as I'm looking at the market, you are seeing, will oil boom for the summer? The reason, the logic behind this is, for the short term, I'm still a green energy person. I'm not an oil person. I left oil alone for a long time, but oil got so cheap and so down at the bottom as everybody went to green energy. But in the short run, as everybody anticipating, everybody's getting out, will people buy more gas? Will the demand for gas start to go up? Transportation. I don't know if people are going to go to work like they were, but as those planes get back in the sky, as those cruise liners get to cruising, all these things, and we always know oil prices go up in the summertime, especially as we hit spring break going into the summer. So as people start to travel, oil start to go up and things like that. Will oil boom this summer? We are set for oil boom. The first thing is the way you can, and we're going to talk about ways you can benefit from this. I can understand that logic. I'm watching oil pretty closely. Of course, I'm watching that BPT, and I'm also watching that Gush. And I don't know about XOM, Chevron. I'm not going to get traditional companies, but oil is looking like it's setting up that it could possibly be a nice boom for the short term. For the short term person to say, hey, you know what? This summer, all this anticipation of travel is going to release, and everybody's going to travel and go to weddings. I think I got a wedding to go to this summer. People are going to travel. I think I got 2 weddings to go through this summer. So people are going to get back and start to go to weddings, and vaccinations going to come out, and people are going to be back to traveling. People are going to go back to vacationing and going to spas and all the other stuff like that, getting back on the, doing carnival cruises. Truck drivers are going to continue to drive. Will the demand for oil increase this summer? That's what I'm looking at. But the only thing that's crazy about that is OPEC. You got OPEC, which is the government, over in the Middle East. They decide how much oil is going to get pumped. They control the oil prices. So the one thing that makes that very risky is you have to understand political and international risk, because overseas, they can just wake up on the wrong side of the bed. No offense to my overseas friends, but they could wake up on the wrong side of the bed and just say, hey, you know what? I'm pumping this much oil. I don't care what nobody says. Or you know what? I'm pissed off at this country, at Russia. So I'm going to piss off oil to throw off the oil prices. So people would do that. So that affects oil prices, but I can see the demand. I'm only speaking on the demand. I can see a potential demand because I haven't heard of airplanes flying on green energy as of yet. So as these planes get to flying, as this anticipation, everybody's anticipating Disney World. People are going to have to travel to get to Disney World. People are getting excited about Six Flags and restaurants and Carnival cruise and travel and things like that. In order to travel, who's going to be the base behind all of that? I can see oil. And if supply stays the same, now they increase the supply, they'll throw everything off. If supply stays the same and the demand for oil increases by this summer, then I can see oil starting to boom. not a boom, but I can see a nice rise in the decrease. If they keep the supply the same and the demand increases, I can see the demand for oil increase in the summertime, because historically oil prices go up in the summer. People travel more in the summer historically. Now we have pent up travel, and it's coming to summertime, and we're looking to have vaccinations where they're looking at President Biden looking at July 14th is when he's going to open back up the nation. Everybody opens up the business and everybody goes out and run. Hey, whatever. Right. So we're looking at that. We're following that very closely. Will oil boom in this time? All right. So I think it is for the demand. So let me see what y'all saying in this comment box. Lucky's mom said, yes, it is. She's speaking about, I'm thinking she's speaking about that oil pent up. So yeah, that's pretty funny. And Miss Thompson said, this is why I follow you. LOL. You offer great gems. Thank you. Definitely appreciate it. Okay. LK Ross said, I'm looking at the chart for DIA. I never thought to trade it only. He said, I never thought to trade it. Only did the SPY QQQ. What is IWM? Let me see what that is. I'll give me 1 second. Y'all give me 1 second. I'm gonna just pull up on my phone. Oh, the Russell. Okay, yeah, that's what you were talking about earlier. The Russell 2000. No, the Russell 2000 is a good one too, because the Russell, those are your small businesses. Those are your very small ETF indexes that can take off. Small cap is the way. I'm very big into small cap companies because those are the ones that can really take off. All right. So SPY, QQQ, and IWM. Yeah, you had the Dow Jones as well, DIA. He said, I'm looking at the chart for DIA. I never thought to trade it. That's why you tune into the investor show. See? It's jam. Okay, Ross said, I missed out on so much money. Hey, you know what? That's why. Hey, you know what? That's part of life. You know what? I don't say you missed. I would say that some lessons cost you more money. That's all. You just learn something new. There are plenty of things that I learn every day that, man, goodness gracious, I wish I would have known that. Max B said, who really want to be on a plane or a cruise this early? You got a good point. I mean, I'm not waiting to go on a cruise line. I'm not waiting to get the vaccine. Like, I got to have a vaccine the first one that come out. I'm just back playing it cool. When it comes to time, it comes to time. I mean, I do want to go on a cruise. I do want to go to South America. It's a couple of states I want to go to. So I don't know. Before the pandemic, I was out a little bit. I did a couple book signings out here in Denver and Georgia and New York City. And I could possibly do more, but we got to wait till, schools. I was doing a lot of school appearances, boys and girls clubs appearances, things like that. So, I'm definitely looking to go back to it. I definitely want to go on vacation, and it doesn't have to be, is this thing even working? It definitely does not have to be a cruise line, right? Elliot Mark says, what do you think about Reits? Okay. I've had Brad Thompson on, who's the Ford's real estate, Rips, the real estate guy, expert, the REIT guy. He came onto the show. I probably need to reach back out to him. In theory, REITs sound very good. The only thing I don't like about REITs are real estate investment trusts. And when I look at real estate in the market, you look at real, raw real estate. Over these last 2 or 3 years, it's been booming. Real estate has been doing pretty well. It was competitive to buy my house. I mean, people were overbidding left and right. It was competitive to get into the housing market in the middle of a pandemic. So the only thing I didn't like about that was when I looked at 1 second. The only thing I didn't like about those REITs was it's off it. Okay. The only thing I didn't like about those REITs was as the real real estate market was still going up, the REITs were going down. So right now, REITs, real estate investment trusts, they sound good in theory. I don't like them when it comes down to your I don't like REITs when it comes down to commercial. I wouldn't do commercial real estate. I'll be very concerned about that. Even as the economy opens back up with people going to office buildings, because we just spent the year showing us that, hey, we can do just fine without office space. Hey, we can do just fine without movie theaters. And I tell everybody this, I believe AMC theaters, when you look at all the AMC theaters, they are in perfect prime real estate location. They need to get out of the movie business, or they need to reduce their movie business and turn those theaters into residential living areas. I know it's probably a whole bunch of stuff behind it, but can you imagine if you rented a loft or an apartment or a condo and right below it had a movie theater? Imagine if AMC theaters turned themselves into residential areas. I posted this up on my Instagram the other day. I said, what if AMC theaters got out of the whole movie business and said, hey, people can come downstairs. Downstairs, you have a lounge / movie theater, but upstairs you can go and have a condo, an apartment complex, or whatever. You could turn into lofts or whatever. I think that'd be a great idea for them. But REITs themselves, no, I'm not real big on that. Okay, let me see what you're saying, Elon Max. You said ABR seems to be doing the opposite of other REITs. It has a high dividend and went up with the market. I'm still trying to figure out why. So you look at ABR, see what it is. What type of REIT is this? Let's take a look at this real quick before I head out. Let's take a look at this REIT that you're talking about, ABR. Let's take a quick, okay. So right here, we got ABR pulled up. All right. Okay. Oh, yeah, give me 1 second. Okay. So this Auburn Real Estate Trust is a real estate investment trust. The company invests a portfolio of structured finance assets for multifamily and commercial real estate markets. Primarily consists of bridges, mezzanine loans, including junior participation interest rates and mortgages, direct and segments. In addition to blah, 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 blah. It's a real estate mezzanine finances, junior. Okay, so they're doing a little bit more. They're into they're a real estate investment trust, but they're in structured financial assets. They're doing multi-family homes, which is good, and they have some commercial real estate. I don't know how much they have on that. I have to do a little bit more research, but they focus in loans. They acquire real estate property, invest in real estate investment notes, certain real estate. Okay, it focuses on investment types such as bridge financing. Okay, bridge financing. Mezzanine financing, judge financing, and equity investments. So, okay, it's a bridge financial product to borrows, typically short-term capital to use as an acquisition for another property. Okay, so it lends out money, things like that. Okay, so it does a couple things. It's doing a couple things. So let's take a look at the chart on this thing. Let me get this out of here. Year to date is doing very well. It's doing very well so far this year. Let's go back 5 years. Woo, my God. Look at that drop that it had. Man, look at that drop that it had last year. That's why I don't like this so much. You see, look at this massive drop that it had in last March. That, it went down so much. It went down to, how much was this? It's $16 a day. But at that time, it went down to $4 at its bottom. And then it's been on an uptick ever since I think that was like March of last year. But when you look at the real real estate market, you didn't see this happen in the real real estate market. That's my problem I had with Reits. So you see that big drop. So it doesn't seem too bad, but not something I'd be too, Max B said it's the popcorn included in my rent. So think about it. You had a date come over, or if you are in a relationship or whatever, you can go downstairs and check out a movie, and they'll make more money from residential, and they're in prime location. Every time you see a movie theater, they're located right next to a Chili's or a Applebee's, and those are located right next to shopping centers, so people can go out and shop. They're prime real estate areas. Yeah, so it's not too bad. He said, Elliot Mack said, thanks. Yeah, it's not too bad. As a quick glance, it's going on a tear this year. It's just that you've seen REITs get hit so bad from the downturn when everything went down, but real estate like land and houses, you didn't see that drop. All right. So hopefully that help y'all out. But anyways, ladies and gentlemen, let me do a quick recap before I get out of here. I got to get to return some phone calls, all the good things like that. So we talked about the Federal Reserve. They're looking at they're pumping money into the market. One, the two things they're looking at is unemployment and inflation. When you see unemployment starts to drop and you see inflation get over 2%, that's when you can anticipate a rise in interest rates. So when you see people getting scared about interest rates and those two indicators haven't been hit, this could be a buying opportunity for you potentially. We looked at the index rotation. The Dow Jones is the number one performing out of the top three indexes, the Dow Jones, NASDAQ, and S&P 500. And we're seeing the NASDAQ is on the bottom so far this year when the NASDAQ was on the top this year. So we talked about people are rotating out of one index, going into another index, and you're seeing Caterpillar tearing off on the Dow Jones over there. That's how you can find certain things. We also looked at oil booming for the summer. We're not talking about a particular oil prices, but oil demand. We have a lot of pent up travel that can increase the demand for travel. And when we travel, when you look at planes, boats, yachts, gas, as people start to get out more, you can see a demand for oil potentially increasing. As supply stays the same and demand goes up, that means oil prices can start to increase. And if that does, you can position yourself in something like a Gush or a BPT. All right, let me see what y'all say in the comments before I roll out of here. Oh, Miss Viva, how you doing out there in California? She said APR dropped as so many holdings had the massive drop in March of last year. This is when the pandemic hit and the lockdown started. You're right. Your APR dropped, but the thing about it is majority of the REITs got hit. But when you looked at real estate, you didn't see housing markets go down. You didn't see land value drop. You didn't see that happen in a real estate market, but you seen that happen so much in the REIT market. That's why I wasn't too crazy about that. Posted said more money, print BT sit to the moon. Yeah, as we print more money, you can see. I like how Uncle James put that as the irresponsible index. I can see that in BTC Bitcoin. Max B said, everybody be safe. And remember, the bull, you keep putting an I in it. You mean the bull. So you mean the bull will always win. That is true. Ride that bull. Ride the bull. He said oil is coming back. I can't say your name. It's a Sunday Donkey. UCO. That's another one. UCO is another one. But yes, remember, ladies and gentlemen, no matter what happened in the economy, in the words of Warren Buffett, never bet against America. In the words of Prince Dykes, ride the bull. Ride the bull, and the bull will always win, ladies and gentlemen. That's my outlook on the economy. I'm a bull guy. I'm very optimistic about things. We will have things happen along the way. But guess what? People would panic, cause assets to fall. This is when opportunities for bulls come along, and we'll be all right. The only time I would get concerned, the only time I would stop riding a bull is when the military gets weak. Once the United States government, when the United States military starts to get weak, that's when I would be of concern. That's when I would be of concern. Big concern. All right. So anyway, ladies and gentlemen, boys and girls and children of all ages, hopefully you guys and girls Ms. Viva said, thank you. Always so informative. Thank you. And I'm glad I can give you some good information on today. Ladies and gentlemen, don't you forget to hit that like, subscribe, comment, share button. Make sure you go out there, and as you're learning information, you go out and grab the #1 children's financial literacy book in the world, Wesley Learns. You know, we have the children's book on Wesley Learns to Invest that was released. What everybody's talking about today, we wrote books on it 5 or 6 years ago, published it ourselves. Wesley Learns to Invest, Wesley learns about credit, and Wesley learns about insurance. Kid-friendly approach to the world of investing, credit, and insurance. Valuable things for all your kids need. We have those in hardback, paperback, audio, and ebook, available everywhere books are sold, almost, kind of, sort of. So go out, and everyone that you purchase goes supports my foundation, the Global Children Financial Literacy Foundation, where we turn kids into first-term shareholders, and also it supports the Boys and Girls Club of America for the 3rd book. So anyway, ladies and gentlemen, I thank you. And if y'all, I always tell people, if you want to support me, don't donate, support to me. And that's pretty much it. Follow us on all our platforms: Facebook, Instagram, YouTube, and Twitch. All right. But anyway, ladies and gentlemen, boys and girls, until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, peace, be safe. I'm out, and thank you.